Switzerland's economy history, the business of secrecy and trust. Switzerland's economy, characterized by a long history of stability, innovation, and a global reputation for banking secrecy and trust, presents a fascinating case study in economic development and financial services. The Swiss economic model, evolved over centuries, is deeply rooted in principles of confidentiality, political neutrality, and economic resilience. These elements have shaped Switzerland into a global financial hub, renowned for its wealth management services and as a safe haven for international capital. Historically, Switzerland's journey as a financial center began in earnest in the late 19th and early 20th centuries. Its political neutrality, particularly during the two world wars, played a pivotal role in attracting wealth from across Europe and beyond. This neutrality, combined with a stable political environment and strong legal system, fostered an atmosphere of trust and security for international investors. The Swiss banking law of 1934, which codified the principle of banking secrecy, further cemented Switzerland's reputation as a confidential and secure place for financial assets. The law was primarily a response to the growing concerns about privacy and asset protection, particularly in the turbulent interwar period. Throughout the 20th century, Switzerland's financial sector expanded rapidly, benefiting from the global demand for private banking and asset management services. The Swiss franc's strength and reliability, along with the country's robust regulatory framework, attracted a significant influx of foreign capital. Swiss banks became synonymous with wealth management, private banking, and discretion. This secrecy and trust became central pillars of Switzerland's financial industry, contributing significantly to the country's economic prosperity. However, the business of secrecy also attracted controversy, particularly concerning allegations of tax evasion and money laundering. In response to international pressure, Switzerland began to relax its banking secrecy laws in the late 20th and early 21st centuries. The global financial crisis of 2008 and subsequent international regulations on tax evasion and financial transparency further pressured Switzerland to align with global banking standards. This shift marked a significant transformation in the Swiss banking sector, with a greater emphasis on transparency and compliance with international norms. Despite these changes, Switzerland has maintained its status as a global financial center. The Swiss economy, while diversified, remains heavily reliant on its financial services sector. The country has adapted to the changing global financial landscape by focusing on innovation, technology, and sustainable finance. Swiss banks have increasingly embraced digital banking, fintech innovations, and sustainable investment strategies to remain competitive and relevant in the global market. In recent years, challenges such as the collapse of major financial institutions like Credit Suisse have tested the resilience of the Swiss financial sector. These events have led to a re-evaluation of regulatory frameworks and a renewed focus on risk management and stability. Additionally, Switzerland's role in global wealth management continues to be significant, managing substantial assets from international clients. However, the country faces ongoing challenges in balancing its historical commitment to secrecy and trust with the demands for transparency and international cooperation in financial matters. In conclusion, Switzerland's economic history, marked by the business of secrecy and trust, reflects a complex interplay of political stability, financial expertise, and adaptation to global trends. As the Swiss financial sector navigates contemporary challenges, it continues to evolve, balancing its historical strengths with the needs of a rapidly changing global financial environment.